Hello, my students. Welcome back to my channel, Commons with Vikas sir. Yesterday, we learned one important questions relating to treatment of premium for goodwill. Today, this is episode 2 and we'll solve two more problems. So let's read the question. A and B are partners sharing profit and losses in the ratio of 2 is to 1. C is admitted as a partner for one-fourth share of future profit, which he gets equally from spelling mistake equally, it should be from, equally from A and B. That is, C is admitted for one-fourth share, and this one-fourth share is sacrificed by A and B equally. Okay. So sacrificing ratio is already given. Okay, sacrificing ratio is 1 is to 1. First we need to calculate sacrificing ratio. Whenever we are dealing with premium for goodwill, we need to calculate sacrificing ratio. So A and B are sharing equally, so sacrificing ratio is 1 is to 1. C brings rupees 50,000 as capital and necessary amount as premium for goodwill. Okay, the capital brought in by C is given, but the amount of premium for goodwill is not given. Though C is bringing premium, but it is said necessary. See, read the question: necessary amount as premium. Necessary amount as premium means the amount is not given. So we need to calculate the amount of premium for goodwill. Okay, we need to calculate the amount of premium for goodwill. For this purpose, goodwill is valued at rupees 10,000. Goodwill does not appear in the balance sheet. That is, there does not exist the old value of goodwill. So in the previous balance sheet, there is no goodwill. Okay, but for the purpose of calculating premium, goodwill is valued at 10,000. Okay, so premium for goodwill means goodwill into share of new partner. So how do you calculate premium of goodwill? It is calculated by multiplying the market value of goodwill into share of new partner. Okay, so premium for goodwill is equal to goodwill is 10,000 into the share of new partner is 1 divided by 4. So for getting one-fourth share of future profit, he should bring, I think it is 2,500 as a premium, because one-fourth of 10,000 is 1,500. 2,500. Now we need to pass journal entry. So books of A, B, and C. Okay, you need to write in capital. So we have to prepare the format of journal, date, particulars, ledger folio, debit, credit. So I am not preparing the format. So first entry will be relating to capital and second entry will relate to premium, but we can merge the two entries, that is capital and premium. So when capital is brought in by a new partner, the entry will be cash account to who is bringing C's account. Okay, so cash account to C's account, this is for the amount of premium brought in by C. So amount for amount for capital brought in by C. So when C is bringing 50,000 capital, the journal will be cash or bank account. We can write cash or to C's account, that is 50,000. And for premium of 2,500, the entry will be cash to premium for goodwill. So instead of passing two entries here, we can write to premium for goodwill account. Okay, the premium for goodwill account is 2,500. Is my explanation clear? For capital it is cash to a new partner capital, and for premium it is cash to premium goodwill. So we have merged these two entry, cash to C's capital to premium for goodwill. So how much amount is brought in by C? 50,000 as capital and 2,500 as premium for goodwill. Altogether he brings she brings, sorry, 50 uh, 2500. I think 50 plus 2, 52,500. Okay, the narration, being premium for goodwill brought in by C. Or here we have merged the two entry, being cash brought in for capital and premium for goodwill. You can write being cash brought in by C for capital and premium for goodwill. Okay, so now the premium for goodwill has to be transferred to sacrificing partners capital. So when it's transferred, the journal will be premium for goodwill is credited. So while transferring anything, the credited item should be debited. Okay, as premium goodwill is credited, it should be debited. So when it is transferred, premium for goodwill account to sacrificing partners capital. Who is sacrificing? A's capital account to B's capital account. Okay, the entry will be A's capital account to B's capital account. See, the premium for goodwill is 2500. Okay, sorry, 2500. It's 2500, and it has to be shared in sacrificing ratio. Okay, this has to be in sacrificing ratio. Sacrificing ratio is 1:1. Okay, so 2500 has to be distributed in the ratio 1:1. So half of 2500, it is 1250 and 1250. See, the narration will be being premium for goodwill transfer to sacrificing partners capital account. I'm writing in short. Okay, being premium goodwill transfer to sacrificing partners capital account. So these are the two important entry required for these questions. Goodwill does not appear in the balance sheet. If goodwill appears in the balance sheet, we need to cancel. So we need to pass one more entry, that is all partners capital to goodwill for cancelling the existing goodwill. But we don't have to pass these entries here because there is no such goodwill. Okay, I do hope it is clear. So you may take the screenshot. Okay, you may take the screenshot of the question as well as the answer. So let's move to the third question. See, P and Q are partners sharing profit and losses in the ratio of 2:1. R is admitted partner 1/4 share of future profit. R brings rupees 40,000, out of which 6,000 should be treated as premium goodwill. We'll add one thing more. Goodwill appeared in the books at rupees 4,000. Okay, we're adding this. So pass journal entries. Okay, here if you see the question, P and Q are partners sharing profit and loss in the ratio of 2:1. R is admitted as a partner of 1/4 share of future profit. R brings rupees 40,000, out of which 6,000 should be treated as a premium goodwill. So 40,000 is for capital as well as premium. So here thing is 40,000 is equal to capital plus premium for goodwill. Okay, and out of it 6,000 should be treated as premium, and premium for uh, goodwill is equal to 6,000. Then what is the capital? So total is 40,000. Out of 40,000, capital plus premium is 40,000 and premium is 6,000, and capital will be 40,000 minus 6,000. Okay, so it should be equal to 34,000, I think. Aki. Is it clear? 40,000 minus 6,000, that is 44,000. 34,000. And here sacrificing ratio is equal to, see, old ratio is given but new ratio is not given, and it is also not given at what ratio this one fourth will be shared by old partner. So if it's not given, then the remaining share will be distributed amongst the old partner in the old ratio. So when old share is given but no information relating to new share, then sacrificing ratio will be equal to old ratio is equal to definitely 2 is to 1. Again, I'm telling you, old ratio is given 2 is to 1, but new share of new share of old partner is not given. If new share of old partner is not given, then old ratio itself is equal to sacrificing ratio. So there is no need to waste time in calculating sacrificing ratio. It will equal to 2 is to 1. Okay, but here the goodwill appeared in the books at rupees 4,000. So we need to pass one more entry for this. First entry is for capital and premium of goodwill. We can write even cash account or bank account debit to, first we have to write it is PQ, who is the new partner R. So new partners capital account. So it should be R's actually capital account. This is for capital brought in by R as a capital, cash to R's capital, and for premium, it should be cash to premium for goodwill. So it should be cash to premium for goodwill account. Okay. So the R capital is 34,000 and premium is 6,000, right? 34 plus 6, the total amount brought in by R is equal to 40,000. It is also given in the question, right? Okay, this is one entry. Now we have to transfer this premium to sacrificing partner capital account. So the second entry will be premium for goodwill account debit. Whenever you want to transfer something, the its position has to be, if it's credited, it should be debited. If it is debited, it should be credited. So premium for goodwill to, we sacrificing P's capital account to Q's capital account. So the premium for goodwill is 6,000, and this premium has to be distributed amongst the sacrificing partner and the sacrificing ratio. So sacrificing ratio is 2 is to 1. Okay, 2 is to 1. So P will share, P will get 2 by 3. Is it clear? 2 by 3, and Q will get 1 by 3. So 2/3 of 6,000 means 3 to the 6, 2 to the 4. So it should be 4,000, and 3 to the 6, 2 ones are 2. So it should be 2,000. Okay. So if you distribute rupees 6,000 in sacrificing ratio, it should be 4,000 and 2,000. So first entry is cash to premium for goodwill. So cash to premium for goodwill, if you see this is first entry. The second entry is premium for goodwill to sacrificing partners capital. Okay, this is the second entry. And we need to pass one more entry for in order to cancel a goodwill account. Goodwill appeared in the books at rupees 4,000. This 4,000 has to be cancelled. Okay, this 4,000. Okay, this 4,000 has to be cancelled. So while cancelling this, what you have to do, if you want to cancel the existing goodwill, then you have to debit old partners capital, not sacrificing old partners capital to goodwill. Who is old partner? P's account debit, Q's account debit to goodwill. So it should be written off in old ratio, so 2 is to 1, so it will be quite easy. So I'm very sorry, for easy calculation, let's take the premium for goodwill as 3000 is quite little amount, so let's take it's a 30,000. Okay, let's take it at 30,000. I'm really sorry, for my convenience I'm taking 30,000. See, it's a 30,000. So when you have to cancel the old goodwill, then you have to debit the old partners and you have to credit goodwill. So they will share in the ratio of 2 is to 3. So 2 by 3 P and Q is 1 by 3. Okay. So two-third of 30,000. It should be equal to 20,000 and it should be equal to 10,000. So for my convenience, I have changed at 30,000 instead of 4,000. 4,000 is quite a little amount, so I made it bigger amount, and also I changed it 30,000 because it is divisible by 3. Okay, so this is the required entry. So okay, this is the required entry. So I hope you have understood this question. So when premium is brought in by new partner, it should be cash to premium. For goodwill, for capital, it is cash to capital. This premium has to transport to sacrificing partner's capital account. For that, the entry would be premium for goodwill to sacrificing partner's capital account in sacrificing ratio. And if all goodwill appeared in the books, then it should be written off by debiting old partner's capital account and crediting goodwill. So old partner's capital account is debited in the old ratio, not sacrificing. It should be in the old ratio and to goodwill. Okay, I am using old ratio. I am not using the sacrificing ratio. So it is old ratio. Though your old ratio and sacrificing ratio is same, but in every questions it will not be the same. Only for distributing premium for goodwill, we have to use sacrificing ratio. In other cases, mostly we have to use old ratio, and if you are taking all partners, we have to use the new ratio. I hope you have understood this concept. So in next class, we'll learn the preparations of revaluations account. Okay, how can we prepare a revaluation account? So till then, goodbye.